Hello everyone, this is Stephen from Share Navigator with a stock market update, and it's April the 15th. So just before I get into the market update, I just want to make you aware of a couple of things. So when you click in here in the members area to the markets updates daily, you can see we've kind of changed the format a little bit. This is what you're going to see. So what you do here is you can see the dates here of the different videos of the market update. So if you click on whatever date you want to watch, and then just click on start watching from there. It's as simple as that. The other thing to be aware of as well, they're all timestamped, these videos here as well. So if I click in here, for example, if you hover over the time frame, you'll see like a description of what we're discussing at that moment. You can see it changing. So if you wanted to skip to relevant parts, you can do that as well. So just wanted to make you aware of that. And then finally, just a reminder that we're creating a whole new members area. We're going to the watch list, for example. We're going to build a piece of software that's going to automate all of that. And all of this is going to be incorporated into a whole new members area, which is going to be built over the next 2 to 3 months. So any feedback that you'd have, would be much appreciated. Even down to how the stocks are presented in our watch lists, and maybe what in terms of the summary format, what would you like to see in terms of data on each stock? So is it the PE ratio? Is it dividend yield, for example? Remember, the more data we want to see, then it just means that you have to scroll a bit more. So we want a quick snapshot. So which is most relevant to you? Obviously, for me, it will be the target up price or the target price, whether it's up or down. Okay, so jumping then into the market update. So big down day on Friday. So you would remember there on Friday we did this kind of whole session here on what were these kind of blue marks here are in relationship to bond yields. And so when bond yields went over 4.5% and kept rising, this is what happened to the stock market, the S&P 500, right up until October. And it went down about 11%. And that's what we were doing last week. We were saying to you, with the bond yields rising so fast, what could this mean for stocks? And if we were to do pro rata, I'm not saying exactly the same will happen. You could see here 11% would actually bring you down to that 200-day moving average, which is quite interesting. So we had the start of kind of earnings last Friday. We had some of the banks out and they disappointed a bit just in terms of their outlook for net interest margin. There wasn't any increases, and in some cases there was actually some decreases in expectations. The commentary so far is that the consumer is still strong from the bank's perspective, but the market started to sell off in that news. And then of course we had the whole build up of tensions in the Middle East. We've spoken about that for a while, that if that starts to spill over, so then of course we had the attack by Iran on Israel, and so far everybody's trying to kind of maybe play it down a little bit to de-escalate, but that's something that has to be watched as well, because if that escalates, obviously there's knock-on impacts into the stock market of that as well. So on the S&P 500, we got down to our 50-day moving average here. So we said this will be our first support. So I'm going to get rid of this for a moment. So we know now that can go in. We could fall all the way down to our 200-day moving average to reflect the rising bond yields. But now if we were to actually draw kind of resistance and support lines, you can see our lows are getting lower in the short term, and our highs are getting lower as well. So it's making this rolling downtrend at this moment in time. And we've made a bit of support here at the 50-day moving average. Now, the fact that there was no retaliation yet from Israel, and the diplomacy seems to be starting to, at least there's a big attempt at diplomacy. We've got the futures up. So you would have expected after a big down day on Friday when the market was down 1.5%, you'd expect some sort of a recovery rally. But look, the short-term trend is still down. So if we do get a rally today, that's what it is. It's a recovery rally. In terms of our RSI, like again, we created a new low on our 14-day RSI, but we're still not even below 40 yet. So this could have some ways to go before we get into what we call oversold, and really oversold in the S&P 500 and the 14-day RSI is below 30. And we're quite a ways from that yet. So I think if this 50-day moving average does not hold, I'd be thinking for 4,800, maybe 4,850 is probably your target area. And then After that, it's your 200-day moving average. So again, it really depends on this 50-day moving average holding here, and we'll just have to wait and see. Just kind of in terms of the small caps sold off more, as we've talked about, higher interest rates are not good for small cap companies. They're not good for any company, but particularly bad for small cap companies, obviously because they have to service their debt at higher levels. So, and then of course, we had the Nasdaq that kind of went down in tandem with the S&P 500. Nothing strange in terms of, did the Nasdaq set off more than the S&P, and that's not the case. A quick look at the Mag 6, you can see there everything was down with the exception of Apple. Apple was the best performer, Google next, and then a big set off from Nvidia. So the Mag 6 there, you can see all of them going down as well on Friday with the exception of Apple. Apple held up well. So a couple of big up days there for Apple. So Apple is giving a bit of support to the market as well. So I'd actually hate to think where the market would have went if Apple was down in the last couple of days as well. So that's kind of interesting in itself there. Just moving on then into just our long term. I'm going to focus on the long term buy and hold. So we actually haven't added anything in to our long term buy list, even with the sell off on Friday. Nothing got added in terms of stocks that I go and buy now. No problem. Adobe now is getting very interesting to me here. We spoke about that. We spoke about Carnival and stocks like that. So nothing's been added there. And then in terms of the sell list, so this is stocks on the long-term buy and hold sell list. Um, you know, um, there's been a couple taken off it. AIB has been taken off it, for example. So just keep referring to that. So if there's a stock on this at the moment, that means, from my perspective at least, that if I owned it, I'd want to sell it. Okay. And if you're in this list here, this is if I had any of these stocks here, I'd be selling them right now. That's what this list means. So on to our active trader watch list, we've added one stock. So I just want to show you the scan, of course, with a big jump or a big fall. All of a sudden, the scan, when I first ran this scan here, we had like 9, 10 stocks in it. Now there's 52. So you can see what's happening. So remember what this scan is. It's large cap companies all over the world with an analyst target price of at least 10% higher than where the share price is at this moment in time. It's above its 200-day moving average, but the RSI is below, the 5-day RSI is below 20. So we're looking for stocks with strong fundamentals here that are in an uptrend because they're still above their 200-day moving average, but short term, the market has sold off a bit. And you can see it actually dragged up a hell of a lot more companies. Now, a lot of them here, JP Morgan, for example, we didn't add to our watch list. So we go on for to screen these stocks. And what we're looking for is that our potential upside is greater than 15 to 20% higher as well. And we're not seeing that with a lot of them actually. So a lot of them, even though the number jumped up here, a lot of them we didn't actually add. So let me go through two that we did add. We've traded Icon before. So if we go into Icon here, for example, remember we traded this all the way up in this up channel. So this is broken down there now. We've got our RSI here below 20 here. So this stock we've done quite well on. Our upside, it ticks all the boxes in terms of fundamentals, etc. like that. Taking a bit of a breather here, and this is one that if it did cross back above 20, we'd be happy to go and buy. And Cisco, so this is not the technology Cisco, this is the food distributor Cisco. So that's RSI is dropped below 20 again. Now it did last week or about 2 weeks ago, and as you can see here, it kind of crossed back above, but it's failed to make its way all the way back up. So again, we'll just wait for that and wait for the opportunity to present itself. Now with this here, guys, we got to be just small bit careful here. So think about what's going on there. If there's an escalation in the Middle East, just because these RSIs have crossed back above doesn't mean they're not going to cross back down. So you've got to use your intuition here as well. It's not just straightforward. So we've got to keep a good eye on that news to see what's going on. Okay. One thing that has crossed back above, folks, is if you can see here, the euro dollar just this morning, that's crossed back above the 20 on the RSI. So we spoke about different ways of doing this on Friday. So we can go long on the futures. So just buy the euro dollar futures, so the M6E. That's one way. You can use this as a proxy, the FXE, for example. So the FXE is an ETF that tracks the euro dollar. Now, the problem with FXE for European-based investors is that you can't just buy and sell it direct. You've got to use your put options to do that. So sell a put option if it's FXE you want. Or you could actually just go and buy call options on it. So you can see it's dropped down to 98 there. So you could buy something like the $99 call on that. You can see here it's kind of pretty much traded between, you know, 99 and 101. It's down here at the moment because of the sell-off in the euro dollar. But if the euro dollar tracks back up, this will go back up with it. So you could buy a call option on FXE as well. So, you know, there's three different ways you can trade the euro dollar. You can buy the euro dollar futures. That's my preferred way, because it's easier to get in and get out. The other way is if you're not restricted, you can just buy the FXE. If you are restricted, you could just buy calls on the FXE, or you could sell maybe the $98 put on FXE, something like that. So that's the three different ways you could do that euro dollar trade. We'll let you know if and when we place a trade on that. As I said, we're going to monitor things very, very carefully here as regards the markets going forward with this kind of ramp up in tensions in the Middle East. So moving down then to energy. Crude oil, interestingly enough there was a big spike, as you could see there on Friday, and now it's kind of calmed down here a little bit, so it's gone back into this kind of, let's say, very, very short term. It's starting to kind of just give away some of the gains it made recently, but it wouldn't surprise me to see this make a resumption upwards here. And natural gas as well is just marking time here at this moment of time. Still below that 50-day moving average. We want to see it trade above it and then ultimately break above 2. So the narrative hasn't changed on natural gas at all in the last while. Moving on to metals, silver just keeps barreling higher here, which is quite incredible. Something similar with copper. And again, the story here is, especially with copper, is the shortage as the transition into clean energy and the building of electric vehicles, etc., like that. But to me, I think that could change. That story could change in a heartbeat as well. And I just personally couldn't buy into that. And then I'm just going to have a quick look at the bond yields, even though we've kind of touched on it already. But the bond yields are remaining elevated. So as you can see here on Friday, as the markets were selling off, the bond yields came down. So what that shows you is there's a bit of a flight to safety. If you think about it, if there's a lot of people jumping in to buy bonds in the market, the yield comes down because then the demand, obviously the interest rate you pay out can be lower. But it's stabilized since. So this isn't good for equities. I think this is a big problem in my view for stocks going forward. And as long as that remains elevated, for me, the stock market is going to struggle. And if you look at the euro dollar, we've already looked at it there. It's kind of just making a small bit of a stand here. And if we go back all the way to here, I'll just bring this down a bit. I think that's potentially, this is potentially the kind of the support area where it's bounced off before. So I think we could make our way all the way down here. It's a possibility, even though we're here at the moment and RSI looks oversold, etc., like that. It would not surprise me to see the euro dollar all the way down at 105. We will just wait and see how this pans out again this week. We might give this a little bit more time before we start trading that, but this is certainly something that's on the cards right now as well. Okay, guys, so just in summary, I want to go back kind of really to the S&P 500. I'm not ready to do anything with our short futures position at the moment. It's improving in a big way, obviously, in the last few days. I'm waiting to see. I'm fully expecting a relief rally today, but it wouldn't surprise me at the same time if that just petered out at the end of the day, by the end of the day, and fell off. And really what I'm watching there is that 50-day. If that 50-day moving average doesn't hold, I think we could actually make our way down, at a minimum, down to this kind of 4,800 level, 4,900 level. And at that stage, I would literally just be exiting the short futures position. So for those of you who've been asking me about going long in the S&P 500, I would literally wait until our RSI gets below 20, especially in this environment. And then when it crosses back above it, that will be my cue to get in. Now, that's assuming we're not into a significant war in the Middle East as well, guys. So we gotta have balance here and wait. We don't know how that's going to materialize. But at this moment in time, assuming it doesn't, um, if we did get below 20 on the 5-day RSI and cross back above it, that's where I'd be going long. And that's where I'd certainly be exiting my short futures position then at that stage. Okay, this is Stephen here with a market update on April the 15th. Thanks and bye for now.